Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at Everything You Need to Know in 90 seconds at 9 o'clock, with news that tensions are spreading in emerging markets. But first, American household assets rose to $116 trillion, while liabilities stayed little changed at $15.6 trillion. Net wealth rose, but at a slower pace in the first quarter than the fourth quarter of 2017. But it did pass $100 trillion level for the first time ever. While steady gains in home prices continued to bolster household wealth, the decline in stock prices tempered this pace. But rising net worth bodes well for consumer purchasing power and will help sustain household spending, the biggest part of their economy. This data is the essential engine of the world economy, although the rise of the Chinese middle class will change the American dominance at some point. More US Fed data shows that the growth in American consumer credit in the year to April is now running at its slowest increase since 2012. In Canada, they released their latest financial stability report. They see an easing of household debt loads, but reckon they're still too high. It will take a long time to normalise the situation, the bank says. China's foreign exchange reserves stood at $3.1 trillion at the end of May, down $14 billion from a month earlier. That marks the second month of decline. In South America, Argentina is ready for the IMF bailout support. The IMF board will meet over the weekend to formally agree the package. But this comes as its bigger neighbour also shows signs of severe currency stress. Brazil's real has dropped to a two-year low overnight, sparking increased inflation fears. The backdrop is unrest after a massive trucker strike, and they're heading towards a very messy election in October, shaken after bitter corruption convictions of a high-profile strongman leftist ex-president. This new emerging market crisis comes on top of issues in Italy and the collapse of Venezuela, and the money flowing out of other economies like Turkey, who raised their interest rates overnight to 17.75%, Argentina, Indonesia and Malaysia. The odour is spreading. Some say it is triggered by the US Fed's normalisation track, but really far too many emerging countries borrowed far too much money because it was cheap, and are now suffering the consequences of expiring confidence as interest rates rise. And too many of them borrowed without hedging, accentuating their issues. At the heart of many of these countries were dominant strongman leaders who thought they knew best. The US Treasury 10-year yield has fallen today and now at 2.93%, down 4 basis points on the day. The Chinese 10-year is at 3.69%, unchanged, while the New Zealand equivalent is at 2.88%. That's up a strong 6 basis points. And gold moved marginally higher overnight, up $2 to $1,297 an ounce. US oil prices are moving up again, now just on $66 a barrel, while the Brent benchmark is up even further at $77.25 a barrel. And the Kiwi dollar will start today unchanged at 70.3 US cents. On the cross rates are a little weaker at 91.3 Aussie cents and 59.5 Euro cents. That puts the TWI at 72.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.